What's up, millennials? In exchange for about 10 minutes of your time and hopefully a comment as well, today we're going to take a look at the valuation of PaySafe. PaySafe is a company that is going to be acquired by the SPAC under the ticker symbol BFT. Before we start, a few things first though. First of all, I have not done extensive research about this company just yet. Today we're just going to take a look at the valuation according to the SPAC and the company themselves. Secondly, don't trust me, verify me. I'm just documenting my journey here. I'm not a financial advisor. Third, Stock O'Clock. These are very short 1-minute videos that I post every single trading day with news about the stock market. And lastly, Discord. I have a free Discord channel. If you want to join, you can go to nesami.com/Discord. Leave your name, leave your email address, and you'll get access to it. Before we hop into the valuation, we're going to very briefly talk about what PaySafe is exactly. You're probably already going to know this company. This is one of the most popular SPACs out there, I would say. It is a digital payment solution, and it's mostly known for their focus on gaming, on the gaming industry. And they also have many poker clients as well, so shout out to my poker buddies out there. Then, with regards to the valuation, we're going to do a few things first. We're going to look at the pro forma valuation first, based on the share price that they started with, so $10 per share, which is very usual for SPACs. As you can see, it's over here. The letters are a little bit small, I suppose. So the base share price, as always, is $10 per share. Now, the interesting thing is that they don't actually mention the amount of outstanding shares after the merger. So we're going to have to calculate that for ourselves. They do say that their equity value, so basically their pro forma market cap, is $7.195 billion. So that is going to be the pro forma market cap, right? And we know that the market cap is simply taking the price per share and multiplying that by the amount of outstanding shares. So that can actually help us determine the amount of outstanding shares right now, because we know the market cap, we know the share price. So then all we need to do is take the market cap divided by the amount of, or the price per share rather, and then we're going to arrive at 709.5 million shares outstanding after the merger, right? Cool, so we said, all right, market cap is going to be about $7.2 billion. And usually we say, okay, the company is also going to have a net amount of cash on their balance sheet. In this case, it's a little bit different because they actually have a substantial amount of debt on their balance sheet pro forma after the merger, $1.8 billion. So we now not need to take the amount of net cash off the market cap to arrive at an enterprise value, but we need to add the amount of net debt on top of the market cap to arrive at an enterprise value, all right? So if we do that, if we take that market cap of 7.2 billion and we add the amount of net debt on their balance sheet after the merger, we're going to arrive at a pro forma enterprise valuation of $9 billion after the merger, right? Which is also the number that is over here in the investor presentation. The thing is, however, if we go into TradingView, we can see that, well, pre-market, the price of BFT, so the SPAC that is going to acquire PaySafe, has gone up to $19.62. So that's the number that I put in my Excel sheet over here. And then if we take that number and we multiply that by the amount of outstanding shares after the merger, we're going to arrive at a market cap, a pro forma market cap, again, of $14.1 billion and a pro forma enterprise value of $15.9 billion, which is already quite a bit, especially if you compare that with the other SPACs out there. Then, with regards to the fair enterprise valuation, we are going to do it slightly differently from other SPACs we've already done valuation videos for. Because PaySafe is a different company, as in they already have a service that is producing revenue, producing a certain EBITDA, right? So what we're going to do is to look at their EBITDA of 2021, their expected EBITDA of this year, right? Now, we need two things for that. First of all, we need the EBITDA itself, and we need to apply an EBITDA multiple, okay? First of all, the EBITDA itself. Well, if we look in the investor presentation, we can see that they expect to have an EBITDA in 2021 of 561 million. They said, well, first it was probably going to be 501 million, but thanks to the SPAC merger, we're going to have a little bit more room to scale a little bit faster than we would if we had not gone public. So they say, okay, the pro forma upside opportunity is 60 million on top of the expected EBITDA. So then we simply take, okay, the 501 million plus 60 is $561 million. So let's put that in our calculator for now. The next thing that we need is a fair EBITDA multiple, because if you look at their current multiple, it's 16x as stated in the investor presentation. Why 16? Well, if you take that enterprise valuation we just talked about of $9 billion and you divide that by $561 million, you get an EBITDA multiple of 16 more or less, right? But the question is that a fair multiple? Is that too high? Is that too low? We're actually going to take a look at other competitors, other companies, similar companies, to see what their EBITDA multiples are. So here we have an overview of similar companies. And they have, well, divided these in multiple niches, if you will. You have the commerce enablers, you have the e-commerce leaders, integrated payment solutions, and traditional payment solutions. Now, they focus most on companies in the e-commerce sector and the integrated payment solutions, right? So companies like PayPal, Nuvei, I actually didn't really know this company, to be honest with you, Shift for Payments, Repay, and Paya. And you can see the multiples, the EBITDA multiples of these companies over here. These are these numbers over here. So for PayPal, it's 35x, Nuvei 35x as well, Shift 4 35x as well, Repay 27x, and Paya 25x. So you can see that PaySafe's EBITDA multiple of 16x is very much on the low end, right? So now we can say, okay, let's now take the lowest multiple of these ones, of these 5, and let's take also the highest multiple to see what kind of prices we're looking at, right? Well, let's first start with the lowest one, and that is 25x for Paya. So if we take that EBITDA of 561 million of 2021, and we apply that multiple of 25x, we're going to arrive at a valuation of about $14 billion. That is also the number that I put over here in my Excel sheet for the low valuation. And we can also do that for the high valuation, because the highest multiple we see over here is the 35x, right? 35x here, 35x there, and 35x there. So if we take 561 again and multiply that by 35x, we get a valuation, a high valuation, if you will, of $19.6 billion. So that is going to be our high valuation. And now we can also say, well, okay, let's take the average of these two numbers of 14 billion and of $19.6 billion. And that is going to be $16.8 billion. So we now have those enterprise valuations, but we want to reach a fair market cap and also a fair price per share. How do we do that? Well, first of all, we take these enterprise valuations, we subtract the amount of net debt on their balance sheet, which is going to be $1.8 billion, as we discussed in the beginning of this video. And then you're going to arrive at a fair market cap of 12.2 billion for the low valuation, 15 billion for the midpoint valuation, and 17.8 billion for the high valuation. Now we can do one more step, which is to take these market caps and divide them by the amount of outstanding shares after the merger. And we said in the beginning of this video, well, that's going to be 719.5 million shares outstanding, right? Cool. So you take those market caps, you divide them by the amount of outstanding shares, and then you're going to arrive at these prices per share. So for the low end, it's $16.98. For the midpoint valuation, $20.88. And for the high valuation, $24.78. Keep in mind, we have been using several EBITDA multiples of 25x on the low end, 35x on the high end. I would not be surprised at all if we would start to trade at the more on the high end of this situation, because I think PaySafe could be compared a little bit better to companies like PayPal instead of the lower EBITDA multiple companies, if you will. So now we reached the conclusion that the midpoint valuation of PaySafe is going to be $20.88 per share, which means that PaySafe currently is a little bit undervalued. But of course, keep in mind, never trust me, always verify me. Check what I'm doing, check if everything is actually correct. And also take into account, we have been taking a look at assumptions, right? So we've taken a look at the predicted EBITDA of 2021. It might be completely different. It might be higher, might be lower. If you change that number, the entire calculation is going to change as well, and the fair price per share is going to change as well. I hope you found some value in this video. If you did, then please consider sharing this video with your friends who are also investing in SPACs. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.